Have you ever watched cryptocurrency prices skyrocket overnight and thought, I should have bought that, only to see those same prices crash just as dramatically a few days later? You're not alone. Millions of people worldwide are asking themselves the same burning question. How do I actually make money trading crypto without losing everything I invest? Welcome back to the channel, everyone. I'm here to give you the honest answer to that question, and it's probably not what you expect. Whether you're completely new to crypto trading, blockchain technology, or you've been watching Bitcoin prices from the sidelines wondering if it's too late to start, this comprehensive guide will transform your understanding of digital assets. Here's what nobody talks about. You've probably seen those social media posts showing massive cryptocurrency gains, screenshots of accounts that went from thousands to millions. But what you don't see are the countless stories of people who lost their life savings, their retirement funds, or money they borrowed because they thought crypto trading was a guaranteed path to wealth. Cryptocurrency trading has evolved from a niche hobby into a mainstream investment strategy. With crypto exchanges processing billions in daily volume, retail investors worldwide are discovering both the incredible potential and devastating risks of digital currencies. But here's the reality. Successful crypto trading requires more than just buying low and selling high. It demands understanding market psychology, technical analysis, risk management, and the fundamental principles that drive blockchain networks. Many people jump into cryptocurrency markets without proper education, only to face devastating losses. Others miss incredible opportunities because they don't understand how to read market signals or manage their portfolio effectively. Today, we're changing that narrative. We'll explore proven trading strategies, essential tools for market analysis, common pitfalls that destroy accounts, and the mindset required for long-term success. We'll discuss everything from setting up your first trading account to advanced concepts like dollar-cost averaging and position sizing. Whether your goal is generating passive income, building wealth through strategic investments, or simply understanding how cryptocurrency markets function, this video will provide the foundation you need. Let's begin this journey together. Before we dive into solutions, let's address the elephant in the room. Why do most cryptocurrency traders lose money? The statistics are sobering, but understanding these challenges is your first step towards success. Market volatility and emotional trading. Cryptocurrency markets never sleep. Unlike traditional stock markets with opening and closing bells, crypto trades 24 hours a day, 7 days a week. This constant movement creates incredible opportunities, but also unprecedented volatility. Imagine you buy a digital asset on Monday morning, and by Tuesday evening, its value has dropped 30%. Then, by Friday, it's up 50% from your original purchase price. This emotional roller coaster destroys most traders because they make decisions based on fear and greed rather than strategy. New traders often fall into the FOMO trap, fear of missing out. They see prices skyrocketing and jump in at the peak only to watch their investment crumble. Conversely, when markets crash, panic selling locks in losses that could have been recoverable with patience and proper risk management. Information overload and analysis paralysis. The cryptocurrency space moves incredibly fast. New projects launch daily, regulations change weekly, and market sentiment shifts hourly. Social media platforms overflow with trading signals, expert predictions, and conflicting advice. Many traders spend more time consuming content than actually trading. They follow dozens of influencers, join countless trading groups, and try to process every piece of market news. This information overload leads to analysis paralysis, the inability to make decisions because of too many options. Lack of fundamental understanding. Most people enter cryptocurrency trading without understanding the underlying technology. They don't know the difference between proof of work and proof of stake consensus mechanisms, or how smart contracts function, or what drives adoption of specific blockchain networks. This knowledge gap makes them vulnerable to hype-driven investments. They chase trending coins based on social media buzz rather than fundamental value propositions. When these speculative bubbles burst, uninformed investors suffer the greatest losses. Poor risk management. Perhaps the biggest challenge facing cryptocurrency traders is inadequate risk management. Many treat crypto trading like gambling, risking money they cannot afford to lose. They don't use stop-loss orders, diversify their holdings, or position size appropriately. Some traders go all in on single positions, believing one trade will make them wealthy. Others use excessive leverage, amplifying both potential gains and catastrophic losses. Without proper risk management, Even profitable strategies eventually lead to account destruction. Technical analysis. Confusion charts, indicators, support levels, resistance zones. Technical analysis can seem overwhelming for beginners. Many traders either completely ignore technical analysis or become overly dependent on complex indicator combinations that provide conflicting signals. The abundance of trading tools creates another problem: over-optimization. Traders spend countless hours backtesting strategies on historical data, creating systems that worked perfectly in the past, but fail in live markets due to changing conditions. Now that we understand the challenges, let's explore proven strategies and frameworks that successful cryptocurrency traders use to navigate these markets profitably. Foundation: understanding market structure. Before placing any trades, you must understand how cryptocurrency markets operate. Unlike traditional markets with centralized exchanges and regulated market makers, crypto operates across hundreds of exchanges worldwide, each with slightly different prices and liquidity levels. This fragmented structure creates arbitrage opportunities, but also means that news impacts different exchanges at different speeds. Understanding market microstructure helps you anticipate price movements and identify optimal entry and exit points. Strategy 1. Dollar cost averaging, DCA. Dollar cost averaging is perhaps the most powerful strategy for long-term cryptocurrency accumulation. Instead of trying to time perfect entry points, DCA involves making regular purchases regardless of current prices. Here's a simple example. Instead of investing $5,000 all at once, you invest $500 every month for 10 months. When prices are high, you buy fewer units. When prices are low, you accumulate more. Over time, this smooths out volatility and reduces the impact of emotional decision-making. DCA works exceptionally well in cryptocurrency markets because of their cyclical nature. Major cryptocurrencies tend to follow 4-year cycles aligned with mining reward halvings, creating predictable accumulation and distribution phases. Strategy 2. Technical analysis fundamentals. Technical analysis involves studying price charts and trading volume to identify patterns and trends. While it might seem complex, successful crypto trading only requires understanding a few key concepts. Support and resistance levels are foundational. Support represents price levels where buying interest typically emerges, preventing further declines. Resistance represents levels where selling pressure increases, limiting upward movement. These levels often align with psychological price points, round numbers that attract trader attention. Moving averages smooth out price action to reveal underlying trends. The 50-day and 200-day moving averages are particularly important. When shorter-term averages cross above longer-term averages, it often signals upward momentum. The opposite suggests potential downtrends. Volume analysis confirms price movements. Rising prices accompanied by increasing volume suggests genuine buying interest. Price increases on declining volume might indicate weakening momentum and potential reversals. Strategy 3. Risk management framework. Professional traders never risk more than 1 to 2% of their total account balance on any single trade. This position sizing ensures that even a series of losing trades won't destroy their account. Stop-loss orders are essential risk management tools. Before entering any position, determine your maximum acceptable loss and place a stop-loss order at that level. This removes emotion from exit decisions and prevents small losses from becoming catastrophic ones. Diversification within cryptocurrency markets is crucial. Don't concentrate all holdings in 1 or 2 assets. Spread investments across different categories: large-cap cryptocurrencies, mid-cap alternatives, and potentially small allocations to higher-risk opportunities. Strategy 4. Market cycle understanding. Cryptocurrency markets follow predictable cycles driven by adoption waves, regulatory developments, and technological improvements. Learning to identify cycle phases helps time entries and exits more effectively. Bull markets typically begin quietly, with prices gradually climbing while media attention remains low. As momentum builds, mainstream coverage increases, bringing fresh capital and driving parabolic price movements. Eventually, euphoria peaks and correction phases begin. Bear markets often last longer than bull markets but create the best accumulation opportunities. During these periods, focus on building positions in fundamentally strong projects, rather than trying to catch falling knives with short-term trades. Strategy 5. Fundamental analysis integration. While technical analysis helps with timing, Fundamental analysis identifies which cryptocurrencies have long-term potential. Key factors include development activity on blockchain networks, real-world adoption metrics, partnership announcements, and regulatory clarity. Network effects are particularly important in cryptocurrency valuation. Projects with growing user bases, active developer communities, and expanding ecosystems typically outperform over longer timeframes. Look for increasing transaction volumes, wallet addresses, and application deployments. Advanced concepts, portfolio management. Successful cryptocurrency trading extends beyond individual trade selection to overall portfolio construction. Core holdings should consist of established cryptocurrencies with proven track records and strong network effects. Satellite positions can include smaller allocations to emerging projects with higher risk-reward profiles. Regular rebalancing ensures that portfolio weights don't become overly concentrated in outperforming assets, maintaining intended risk levels. Tax considerations are increasingly important as regulatory frameworks develop. Keep detailed records of all transactions, understand your jurisdiction's cryptocurrency tax obligations, and consider the timing of realized gains and losses. Here's the most crucial insight that separates successful cryptocurrency traders from those who consistently lose money. Trading success isn't about finding the perfect entry point or predicting short-term price movements. It's about developing and consistently executing a systematic approach that manages risk while capturing long-term value creation. This revelation might disappoint those seeking get-rich-quick secrets, but it's the foundation of sustainable trading success. Let me explain why this mindset shift is so powerful. The systematic approach. Successful traders treat cryptocurrency trading like running a business, not gambling at a casino. They have written trading plans that specify exactly when to enter positions, how much capital to risk, where to place stop losses, and when to take profits. They follow these rules religiously, regardless of emotions or market noise. This systematic approach removes the psychological burden of making decisions under pressure. When markets are crashing and fear dominates headlines, systematic traders continue executing their predetermined strategies. When euphoria peaks and everyone believes prices can only go higher, they stick to their profit-taking rules. The power of consistency. Mathematical expectancy is the cornerstone of professional trading. If your trading system wins 60% of trades with an average win-to-loss ratio of 1.5 to 1, you'll be profitable long-term even if individual trades lose money. Consistency and execution is what transforms this mathematical edge into actual profits. Most failed traders abandon their strategies after a few losing trades, constantly searching for better systems instead of allowing their current approach time to work. They confuse short-term results with long-term expectations, destroying any chance of success. Risk-first mentality. Professional traders think about potential losses before considering possible gains. They ask, how much can I afford to lose on this trade? Before asking, how much might I make? This risk-first mentality ensures survival during inevitable drawdown periods. Amateur traders do the opposite. They fantasize about massive gains while ignoring the possibility of losses. This leads to position sizes that are too large, inadequate stop losses, and emotional decision-making when trades move against them. The compound effect. Small, consistent gains compound into extraordinary returns over time. A trading system that generates just 15% annual returns will double your account every 5 years. Most traders ignore this mathematical reality, seeking 100% gains that rarely materialize sustainably. The most successful cryptocurrency traders focus on preservation of capital and steady growth rather than home-run trades. They understand that staying in the game long enough allows compound returns to work their magic. This is your key moment of clarity. Stop looking for trading shortcuts and start building systematic approaches that you can execute consistently regardless of market conditions. Your future self will thank you for making this mental shift today. Let's consolidate everything we've covered into actionable steps you can implement immediately to improve your cryptocurrency trading results. Essential takeaways. First, understand that cryptocurrency trading is a skill that requires continuous learning and practice. The markets evolve constantly, and successful traders adapt their strategies while maintaining core risk management principles. Never stop educating yourself about blockchain technology, market dynamics, and trading psychology. Second, develop a systematic approach before risking significant capital. Define your trading time frame, risk tolerance, and profit objectives. Create written rules for entry and exit criteria, position sizing, and risk management. Test these rules on paper or with small amounts before scaling up. Third, prioritize risk management above everything else. Use appropriate position sizes, implement stop-loss orders, and maintain diversification across different assets and strategies. Remember, your primary goal is staying in the game long enough for your edge to manifest through compound returns. Fourth, focus on major cryptocurrencies with strong fundamentals and proven track records when starting your trading journey. As your experience and account size grow, you can gradually explore opportunities in smaller, more speculative assets. Fifth, control your emotions through systematic decision-making. Fear and greed are the enemies of profitable trading. Stick to your predetermined rules regardless of market sentiment or short-term results. Consistency in execution is more valuable than perfect market timing. Implementation strategy. Start by selecting a reputable cryptocurrency exchange and completing all security measures, including two-factor authentication and secure storage solutions. Begin with small amounts while you develop and test your trading strategies. Create a trading journal to track all decisions, including the reasoning behind each trade and lessons learned from both winners and losers. Regular review of your trading journal helps identify patterns and areas for improvement. Set realistic expectations for returns and drawdowns. Cryptocurrency trading can be highly profitable, but it's not a guaranteed path to wealth. Treat it as a serious business endeavor that requires time, capital, and emotional energy. The path to cryptocurrency trading success is straightforward but not easy. It requires discipline, patience, and continuous learning. Those who embrace these principles while managing risk appropriately will find tremendous opportunities in these evolving markets. Your cryptocurrency trading journey starts with the first decision you make after watching this video. I want to hear about your experiences, challenges, and questions in the comments below. Are you just beginning to explore cryptocurrency markets, or have you been trading for a while? What's your biggest challenge right now? Is it understanding technical analysis, managing emotions, or finding reliable information sources? Share your story in the comments, and I'll personally respond with specific advice tailored to your situation. If this comprehensive guide provided value, show your support by hitting that like button and subscribing to the channel with notifications enabled. Your engagement helps me create more in-depth content that serves our growing community of serious cryptocurrency traders. Next time, we're diving deep into advanced technical analysis strategies specifically for cryptocurrency markets, including how to identify accumulation and distribution phases, read order book data, and use volume profile analysis for better trade timing. For those ready to take immediate action, check out this other video. Don't lose money trading crypto without knowing this one thing. Remember, knowledge without action is worthless, but action without knowledge is dangerous. Start small, think systematically, and never risk more than you can afford to lose. I'll see you in the next video, where we'll continue building your cryptocurrency trading expertise together.